2 surveys taken before the war, 1 taken after. The before picture is the best it's been in 18 months. The after picture is darker. Here's what the Bank of Canada just told us, and who it just put in charge of reading the signals. Let's start with what businesses see. The Business Outlook Survey indicator has steadily recovered to 22, reaching levels we haven't seen since before the trade conflicts. In fact, the share of firms planning for a recession has plummeted from 22% down to just 9%. That is the lowest level on record since 2023. We are also seeing investment intentions pick up, specifically among trade-affected firms, which are finally starting to normalize. But what's holding back spending? Almost half of businesses point to high prices and economic uncertainty, far outweighing concerns about rent or job security. And here is where the story shifts. In special follow-up calls after the Middle East conflict broke out, we saw an immediate spike in weekly inflation expectations. There's a critical gap in the data. Firms' long-term outlooks haven't moved yet, but their input costs for fuel, fertilizer, and freight absolutely have. For BC's exposed sectors, like softwood lumber and the Port of Vancouver, this margin squeeze is the real story. As one trade-sensitive respondent noted, they felt they were through the worst of it after the recent U.S. Supreme Court actions. But the new conflict adds fresh uncertainty. Now let's look at what consumers feel. The Consumer Expectations Index saw a slight pre-war improvement, rising to -0.77. Sentiment is still below historical averages, but households were becoming less pessimistic. One major trend: 87% of consumers report spending more on Canadian-made goods, and nearly 2/3 expect this preference to persist long-term. This Buy Canadian persistence is a structural shift in how households plan to allocate their budgets. We also got new data on AI in the workplace. Canadians are primarily using AI for writing, data coding, and brainstorming, treating it as a productivity booster rather than a replacement. But the mood shifted sharply in late March. In a special survey, 81% of households now expect the war to raise inflation, directly threatening Vancouver's already stretched affordability. Consumers are bracing for impact. If the war persists, they expect gasoline prices to jump 11% and food to jump 9%. Even if resolved quickly, food costs are expected to stay elevated. The result? 28% of households have already postponed or cut major spending entirely. As one respondent noted regarding AI, it is used as an aid, not as a replacement. The same logic applies to how consumers view their budgets: cautious adaptation. Finally, there are new hands on the wheel. The Bank of Canada appointed 2 new deputy governors, Marc-Andre leading domestic analysis, and Nicholas Vincent handling international. For BC households watching the bank's next rate decisions, these are the voices who will be interpreting these exact signals going forward. To stay ahead of the local market impacts, subscribe to our channel for the next data brief.